Personal finance expert Mary Holm is in the house. Kia ora.
Kia ora, Jesse.
Nice to see you.
Thank
And
you.
gosh, last time I checked my credit card looking for places to save, insurance was the thing that popped out. Of course, it's probably the last thing I'll cut, but it's a big expense, particularly as you get older.
Yes. Look, it sure is. The age thing affects the health insurance in particular. Yeah, and everybody gets shocked by that.
Yeah, and life insurance probably.
Yes, I suppose. I haven't had life insurance for a long, long time because I haven't had anyone else who'd really care if I died. Well, that's not
Present
quite
come
true.
next, Mary. I would care, but I wouldn't expect you to leave me anything.
Yeah, okay.
Apart from maybe a copy of each of your books.
I'll put that in my will.
Insurance is a great topic, though. It's such a personal finance, such a key aspect of personal finance.
Yeah, it is, and it kind of sounds boring. And I was pondering that as I drove in that it's reading insurance policies is boring, and that's one big problem for all of us because we don't read all the conditions on the insurance policy until we need to claim, and then suddenly, sometimes in clause 77D or something, they get out of paying you. But
I suppose you could give it to ChatGPT and tell it to look out for the important stuff.
That's a good idea, actually. Yeah, must try that. But what drew my attention to it all was for the Financial Services Council, which is they've got sort of insurance companies and a whole lot of other financial providers as members, and they surveyed 2,000 New Zealanders. And here's a quote on their key point about it. They said New Zealanders are quick to insure their cars, homes, and gadgets. They're far less likely to protect their health, income and lives, the very things that matter most. Yeah, and I thought, that's an interesting point. And so looking at a bit more at their data, they say New Zealanders are twice as likely to have car insurance as they are to have life or health insurance.
So much more concrete, though, your car, isn't it?
Yeah, it is. And
until something goes wrong with your health or your life, you don't really see it coming.
No, I think that's absolutely right. Well, what they found was 75%, so 3/4 of people have got car insurance. Now, I presume that's 3/4 of all of the 2,000 New Zealanders surveyed, including non-car owners. I don't know. But anyway, most people have car insurance. Then came contents and house insurance. A bit over half had both of those, but only a third have life insurance and health insurance, and a lower number again have income protection and disability insurance. And by far the biggest reason that people gave was that it costs too much, which is what you were saying. And it is a big expense. And I know that at the moment lots and lots of people are trying to cut their expenses. But, as I wrote down here in my notes, it costs much more if bad things happen and you're not insured. So I speculating myself on why people insure their cars and their house and contents, but not their life and their health, etc., is that, well, first of all, lots of people don't need life insurance. As I was saying earlier, I haven't got it anymore because I haven't got any dependents. No one who is counting on me financially to bring in regular income.
No one's going to be stuck
No,
with a big debt if you die.
That's right. And, similarly, disability and income protection insurance, it's totally fair enough to think about who do I need that? Well, that you actually need for yourself when you come to think of it. The disability and income protection you need for yourself, but if you've died, it's other people who are going to need it for you. A point to think about with all this, though, is that if you're starting to get a pretty big KiwiSaver balance, that might do instead of life insurance. It depends on your circumstances.
Interesting.
Yes, because the money is released straight away to the people in your will, if your KiwiSaver money is released. And so if you've got 100,000 sitting there in KiwiSaver, that might be enough, or it might not. But think that you can include that in the equation.
Great thinking, Mary.
When you're thinking about it,
because you won't be using it.
No, that's right, and so it might be enough. Car insurance. I think, and to some extent, contents and house insurance, we use those all the way through our life, really, and possibly particularly when we're younger and more likely to have car crashes, and that's why younger people's car insurance is higher. We're very aware of that. As you go through life, even if you've never made a car insurance claim, people you know have, because cars crash all the time.
You're much more likely to have rubbed up against a car crash than you will have
Yes.
against a surprise brain tumour.
Yeah, I've certainly claimed on car insurance over the years, and you probably have too. I think most of us probably have, even if it's something quite minor.
Yeah.
Another possible thought about life insurance is that people just don't want to think about dying or becoming disabled, or we know we've got a car and we know the car's vulnerable, but we don't kind of want to think about ourselves being vulnerable. So possibly that's part of why. I also wonder if we're just plain selfish. We don't want to spend our money on life insurance because we're not going to benefit from it.
Yeah.
That's a bit harsh, but I think it's probably much more that people don't think about where their family might be if they die or become disabled and can't work anymore. I think that, I don't think it's actually selfishness, but it is thoughtless, I think, for people who have got family members counting on them bringing in regular income, and then they suddenly can't, and it's just awful.
Probably is more real, the idea of yourself getting into trouble and wanting to avoid that, than this kind of imaginary you not being here and your family having to. The human brain isn't good at imagining future scenarios,
especially not negative ones, possibly. And I think we can all imagine if we won lotto, but or if something we did and some creative thing we did was suddenly lauded around the world.
Yeah.
But we don't think about the negative stuff much, probably. Look, I'm not a psychologist, but you can just observe these things, can't you? Quite a few people try and self-insure in different ways, and the argument behind that is that instead of paying premiums, whether it be for car insurance or life insurance or anything else, you instead put that money into a bank account so that it's there for you if a problem arises, and you haven't given the money away to the insurance company. And that can work fine if you don't make any claims early on. But I hear it all the time with people with health insurance. As they get older, the premiums go up awfully fast once you get sort of over 60, and faster again when you get over 70, I think. And people say, I'll self-insure instead. And then it's not uncommon for them to suddenly get a big, expensive health issue happening soon after, and the money's not there.
I suppose if you can maybe have access to borrowing.
Yes, that's right. If you think about other ways you could cope, if you that's where a reverse mortgage might come in, for example, if you've got.
And then you could still pay it off like you were paying your normal health insurance, right?
Yes.
And you probably, even if they are charging you 6 or 7%, you'd probably be. You'd be better off than paying the premium to an insurance company.
It depends so much on
whether it happens or not.
Yeah, and how much happens to you. In the last year or two, I've really got my money's worth out of health insurance because a whole lot of just different, not big deal things, but one after another, different things have happened, and I've thought, wow, this has been a really good deal. But it's. People quite often say, I pay my premiums and I don't get anything back for them, and this is not a good deal.
This is my favourite Mary quote, by the way. I often think about what you're about to say.
Yeah, which is that what you've bought is peace of mind. You haven't bought. Is that the favourite quote?
No, my favourite quote is, if you've never claimed on your health insurance, that's a good thing.
Oh, yes. Well, that's true too.
That's a sign you've had a healthy life.
Yeah. you're lucky.
It's this version of
Yes.
peace of mind, isn't it?
Well, it's a similar point, but you're right. It's
I paid all this money on life insurance. It didn't even die.
yeah, yes, well, exactly. Yes.
Celebrate, celebrate.
And then when the family get older and you don't and aren't dependent on you, people often stop life insurance and say, "Look, I paid for all those years." Yeah. So they had a good run, and in the meantime, they all those years they knew that if they did die, the family would be okay, and that's worth quite a lot to people, I think. Really, if you stop to think about it, it's And the other thing is, if something bad does happen, whether it be health or car or whatever, the last thing you really need, so you've had a bad thing happen in your life, you don't need financial trouble on top of that. You know, even if there's a car crash, someone drove into me a while back and it was totally his fault, but it was still a big hassle for me. And so while the insurance covered it, I had to get the car fixed and set up the insurance claim, and you know, it's a hassle, and it's really nice that you don't have to add to that the money stuff. So keeping insurance costs down, I've got a few ideas on different ways people can do that. One is to have higher excesses on just about everything. Excuse me. For car and all of that, it's fairly obvious how that works. For a loss of income insurance, which is a really good thing to have, if you haven't got any income coming in for a month or more, say the payments start, but you can increase the period from, say, 1 month to 3 months before the payments start, and that reduces your premium a lot. But for health insurance, you can skip, not have cover for GP visits and so on, which is what I've done, is one way to keep that down.
And you can have a higher excess as well.
Yes, that's right.
First $1,000 you pay yourself.
Yeah, or even a couple of thousand. I mean, you can say to yourself, well, look, I can actually cope with $2,000 or $3,000 out of my pocket, and that can really reduce the insurance premiums quite a lot. So, employee schemes, a lot of employers, especially bigger employers, offer various types of insurance to their employees, and they're nearly always a good deal. I mean, it's partly because
I do wonder when they send around this, health insurance for employees, whether it's just to have.
I think not. But I mean, by all means, go and get a quote to see what it will cost you to get it on your own. But for one thing, the data shows that employees as a whole are healthier than the population at large. And that would be true because people with health problems are the ones that are less likely to be employed. So employees are a kind of good bet for the insurance companies. So those schemes tend to be good. And then there's some house and content insurance where smoke and burglar alarms and that kind of stuff, if you put them in, your premiums are lower, as well as reducing the chance of bad things happening to you in the first place anyway, which is nice. No claims bonuses, that's just where the premiums sometimes come down if you haven't made any claims for a few years. So that's kind of nice. And then the last one, of course, is shop around, and we all get told that all the time, and we all say, yes, I must do that, and we all don't do it. And I'm guilty of that on insurance. I have to say I must do it. I did do it recently on electricity and moved to a cheaper electric one. The place for information about insurance is Consumer New Zealand. I really recommend. They do a lot of gathering information about insurance from all the different companies, and you can get a certain amount of information free on their website. The rest you have to pay for, but I think it's kind of an investment in your financial well-being to join up with Consumer and use them for that kind of stuff. There's also just one last point. Yes.
Can I just add Money Hub? I think you put me onto Money Hub.
Money Hub, yes.
Yeah. They have lots of good guides for
they do.
different types of insurance.
Yeah.
And they seem to put a lot of work into working out which is the best deal,
yes.
etc. Yeah.
Yes, they're certainly worth looking at, Money Hub. Yes, I don't know that there are I know the guy that runs it, he's going to be cross with me for saying this, but I wouldn't 100% rely on everything that's on there, but they're pretty good,
Okay.
I think,
Thank
yes. Yeah. Insurance and emergency money. Next time I'm on, I think we'll try and talk about emergency money, because actually it's sorted money month this month, or August, and they that's their kind of theme, is emergency money, and that overlaps into insurance really. The more emergency money you've got stacked away, the less insurance you might need, because you can use that emergency money to pay if there's a car crash or the house suddenly falls apart or whatever. So there's a sort of trade-off going on there. One other quick thing which is not about insurance, or have you got any questions come in about it?
Just a message from Jenny, who says, regarding health insurance, I've just let my policy go as it almost doubled between the age of 66 and 67. It was surgical only, with a $3,000 excess, and I've never made a claim. My advice to my children is open an account, put the equivalent money into that. You will win, easily paying for that hip or knee when you need it, and you'll have change for a holiday, says Jenny. She says she hopes she's done the right thing.
Yeah, Jenny, look, all I can say is I hope we've done the right thing too, and whether the kids will in fact put that money, I mean, great if they do, but look, I've seen too many scenarios where people wish they had kept their health insurance, because you just, especially as you get older, but Jenny might be one of the lucky ones, and she'll be fine.
Okay. Quick word?
There's just one other thing. I just saw some data. It was a research by Henry, which does tax, etc., for self-employed people. And they said a lot of self-employed people are not in KiwiSaver, and what's more, a whole lot of the ones who are getting out now that the government has halved the extra money that it puts in. And I just want to say, look, it's still, if you're self-employed or not employed, so you're not getting anything from your employer, you still, if you would otherwise have, if you set money aside for retirement and it would have come to 100,000, with the money the government's putting in now, which is lower, it still will be 125,000 instead of 100,000. And so it's a real pity to not do it. I just, that's still a nice boost on your savings. Yeah.
Very good. Just a warning from this person. The text is a bit garbled, but I think what they're saying is that when you change health insurance, just be aware that you may have developed health problems over time, and then when you change, you either might find it higher to insure because of what you've developed, or you might find something that you have developed, which was covered by the original, isn't covered by the new one because it's pre-existing.
Totally true. It seems like it's good to get it fairly young when you're pretty healthy, because otherwise they will make exclusions. If you've already got such and such a health problem, they might say, well, we're not going to cover that kind of issue if it comes up in the future. And that's the most likely thing, is that you're going to get continuing problems with your bad back or your, or whatever it is. Yeah.
Thank you. Great to see you.
Thanks, Jesse.
Personal finance expert Mary Holm.